We've seen gold take its steepest dive in 2 weeks today as investors basically ditched the safe havens and bought up stocks. It comes after that Federal Constitutional Court ruling in Germany, which said the first Greek bailout package is legal, and it paved the way for the German Chancellor Angela Merkel to expand the EFSF. We're joined this morning from Chicago by Larry Shover, who's from Efficient Capital Management. Great to have you on board, of course, Larry. The line is that gold drops on the court ruling, but really, did it actually ease fears about the debt crisis? Do they just remain, and is it just kind of technicals and market momentum moving things around?
You know, I think the gold market is technically oriented right now. A little bit of good news came out of Germany, as you just said, something that was very expected by the U.S. market, and all the weak hands that were long gold start to sell it. The thing that's really interesting to point out is that right now we have a floor of $1,800 an ounce and a ceiling of $1,900 an ounce. This has happened 2 times in a row. I don't think it has much to do with Germany, just more to do with people just technically selling it, weak hands, people not knowing what to do right now, because the whole market right now is vagueness and volatility.
Is there any clear positioning, do you think, in things like gold or maybe any other commodities you've watched today ahead of the Obama speech, which happens Friday morning our time, Thursday for you guys, but also there is a speech from Ben Bernanke the next 24 hours?
Yeah, there's a lot of vagueness right now. People are expecting some great things from Obama. I'm not expecting great things, but the fact of the matter is gold right now between $1,800 and $1,900 is flopping around like it did last time. It's vague. People don't know what to do. People don't know where to go. Right now, I think gold had a reverse dead cat bounce where we just knocked off into $1,800 territory. There's a lot of demand support down there. I'm not worried about the price of gold going much higher, and not worried about what Bernanke is going to say or Obama is going to say. Gold is going to continue to trend higher.
Larry, Michael McCarthy from CMC. We saw a huge sell-off in the Swiss franc after intervention from the Swiss National Bank. Now, a lot of global investors were considering the Swiss franc as a safe haven investment, and that 10% move really shook confidence in that idea. Do you think that there was some reminder out of this that defensiveness is also a factor of price, and that gold between $1,800 and $1,900 an ounce may not be a defensive asset?
That's correct. And keep in mind that the Swiss franc, I mean, the last I checked, the implied volatility was 23%. I mean, it's by far the all-time high. Everybody's rushing for some sort of safe haven, whether it be the Swiss franc, the 10-year note in the United States, or gold, what have you. But the fact of the matter is, I mean, this was just a little bit of a sell-off. People are realizing, like, hey, Monday wasn't Armageddon after all the good news that came out. Maybe we bid up the Swiss franc too high, and we should find somewhere else to put our safe haven and find out what's going to happen with both Obama and Bernanke.
And clearly one of the key factors in the gold market has been Chinese buying. Where do you think the floor would be for the Chinese?
Yeah, right now the floor seems to be $1,750. But what's interesting, I talked to some bullion dealers today in London, and it seems like they have the Chinese in context have a very complex buying scheme right now, where they have stops right at 1,800 and a huge buying stop at 1,750. Right now they are big buyers of gold, and I'm comfortable with between $1,800 and $1,900 an ounce. But below that, 1,750 seems a spot where you're going to see a lot of buying from the Chinese.
So active buying in gold, perhaps less interested in copper at the moment, and certainly less active. At what price level are they going to be interested in copper again?
Well, right now, as you know, the Chinese are basically disinterested in the copper price right now, and they can assume to be lazy right now because there's a lot of copper stock in China. I'm hearing that it's over 300,000 pounds of copper sitting in bonded warehouses. So at $8,800 a pound or ton in copper, that's when they'll start to be interested, and that's $4 a pound in the CME terms. So right now we're at $4.15 a pound. We've got a ways to go before the Chinese will get interested, and they can afford to lay back and watch the market.
And which means you think that copper actually remains range-bound for the rest of the year. Some people still look to it as an economic barometer and kind of an indicator of what lies ahead. Will it be useful as an economic barometer if you just think it ends up in a kind of a trading range the next couple of months?
Yeah, I think it is a great economic barometer, and the fact of the matter is copper is going to be range-bound right now because there's so many factors to keep it right around $4 a pound, and that is the strikes we're seeing in Peru. We're seeing that there is some demand support at that level, but on the upside, with all the economic unknowns, I don't think you're going to see any kind of inventory gathering at this price for any time higher. So I would suspect copper to be between $4 and $4.20 a pound between now and December, or until there's more clarity out of Europe and the U.S.
Clearly, that industrial disruption is one of the key factors driving the supply side concerns. Larry, do you think that there's further potential there for that to spread from Peru to other centres in South America and around the globe?
Yeah, absolutely. And you see that the production has come way off. Like right now, we're seeing production about 30% compared to 80% even in the first half of 2011. So you have these strikes going on around the world that are increasing the price of copper. But the bottom line is, after that all flushes out, we're more concerned with economic development from here on out. So that's going to drive copper prices from now until the next 6 to 9 months.
Larry, we thank you so much for your time on the channel today. It's great chatting to you as always. Thanks.